Let's review a couple of trades we took 2 weeks ago, one more tonight, and of course we have to at least talk a little bit about Bitcoin, post-election, and just everything coming up in the markets. Hello, for those of y'all who don't know, my name is Jenny Baker and I am the Six Figure Trading Coach, here tonight with another episode just showing you that trading is as easy as you make it on yourself. We do these videos about twice a month, every other Tuesday, showing you that if you have a consistent strategy, consistent management, you can be profitable in the markets via whatever instrument, cryptocurrency, stock that you are trading, whether it be futures, options, Forex, anything. Literally, if you've got a platform and internet, literally anything. So, of course, we have to do the disclaimer real quick that says, obviously, trading and investing is high risk. Please don't risk what you can't afford to lose. An unpopular opinion, I think it needs to be said, trading is what you do after you're financially sound. Trading is something you do when you're financially stable, not to get financially stable, right? That is constantly left out of every topic. People want to make money with their $100 starting balances, when the reality is your investments should be made after you're okay. They should be with your disposable income and not with your actual capital that you're going to need in the next 3 to 6 months, for example. So, of course, let's take a look real quick at what we've done since we started these YouTubes, right? So a couple of years ago, for those of you guys who don't know, I started this whole journey off really volunteering through a couple of different communities, just believing in the vision. I had some success early on in trading, and cool, I'll help. Since then, we've created all kinds of communities and classes, and we're growing, and it's super exciting to see what's possible. But when one system kind of fell through in terms of, hey, we didn't want to talk about that as much anymore, we wanted to really simplify and teach something else, we started this particular series, which is the 4-hour public swing trading experiment. And the reason we call it experiment was to say, hey, look, we're going to define entries, define management, and see what's possible. We are currently 34 weeks into this experiment. We've got over 30,000 pips. Mind you, different instruments and values are going to vary from broker to broker, but you get the idea. We're averaging about an 88% accuracy. Approximate win-to-loss ratio is somewhere between a 2 and a 4-ish to 1. Definitely not a bad way to be. That's going to be very fluid between things like this. That's already divided by 10, just to kind of cover the difference in the value for Bitcoin. But for the most part, these are all Forex. I think there's one or two exotics, an index and an exotic, and then a crypto. But for the most part, it's all Forex to kind of give you an idea. This is what we've done. So 2 weeks ago, we looked at these 3 pairs. This was a continuation from what we had looked at here because it hadn't really made its move just yet. But that's okay. We did take a loss on the GU pair and a win. This is worth more, although it's only 71 pips. It's actually a higher dollar value than either of these, maybe put together, I think, give or take. So we won 71 pips here, 118 pips here, and lost 96. That's using the very lowest structure plus the very largest ATR in the past 2-week period to give you an idea. So this is worst case scenario that we're dealing with. So 30,000 pips, that's what we're looking at. If you had started off with those smaller balances, notice $100 is not on here, but $500, 1% risk, you're still looking at over $1,700, right? That's your account balance. If you started off with the $10,000, you bought your Honda Civic. Well, I don't know what they're going for right now, but give or take, right? I'm sure there's taxes and fees and everything else. Or, more intelligent, you've built your brokerage accounts, you put a down payment on a rental property, you've done something pretty remarkable. That's all just following these YouTubes in 20 minutes twice a month. So definitely not a bad way to be. I am going to start off by reviewing these 3 trades. We're going to go ahead and look at GBJPY, mostly because we have a lot of news coming out. We have some inflation news tomorrow. We've got a federal chairman speech on Thursday. I think it's PPI and GDP on Friday. And just, I think there's a lot of digestion still in the market post-election. So I'm going to be sitting out of some of the pairs that I like. But it's a good night to go look at the election cycles and maybe crypto, as well as your trusted and true index funds, right? The low-cost index funds that I think are definitely worth discussing. So let's go take a look at the charts real quick and see what we have setting up. Okay, here we are back on my quotes MT4 platform to be specific. We are on a demo account broker, so this is for class purposes, just to kind of show you. Mind you, I do take these trades with you live. I manage them accordingly. I do it on a various different amounts of accounts from lower risk to higher risk, as well as on a copier service we have inside of our community. So the good, the bad, and the ugly is all there, okay? First and foremost, we had taken odd JPY way back here as well. Didn't really make its full move. Since we called it here again, we went over another 117, I think is what I clocked, but we moved 140, give or take. So definitely not a bad way to be. I'm going to remove the drawings here. We're going to take that off of our watch list already. And then we have these two as well. So I guess we'll go next to our loser. I was looking for a bit more of a move, not necessarily to reverse, but just enough to pull back and come clear some of this liquidity. We didn't get it. I mean, we came in pretty close. And by definition, we captured the pips we needed to capture before hitting the lows. So we talk about it. It's predefined. It's 25 to 50 pips. But in full transparency, I took a loss on this, a full size loss. So I got it marked down as a loss, et cetera, et cetera. It is what it is. Real trading, your losses shouldn't be your bad day. It shouldn't be the end of the world. It should be part of your portfolio. Your job is to come to the computer screen and do a good job and let the wins and losses fall where they will. At the end of the week, month, year, the idea is you're net profitable and that's it, right? But let's remove all this. This was a loss, not net profitable. Goes with the territory, sadly. Still don't think it was a bad idea. I think we came up pretty close, just not enough. Maybe the lower end of that scale we tapped, but not to the bigger picture. So that's that. Take that off of our watch list and we're done. Eurochef, I've taken quite a few trades on this wins. I took a loss here recently. Otherwise, I think I've taken over 7 different entries on this in total. From where we looked, we moved another 70, 60, 70, 80 pips, give or take. Cool, definitely not a bad way to be. We got our reaction in that blue target zone. We call those our area of interest, right? We're looking to come clear this level, which means partly before and slightly after. Clear those areas of interest. That's it. And we did that. We got our reaction, bounced back down, came back in, broke above, came back to, and just really stayed within this range for a hot minute. Even as we broke below, we retested that same range before we came back down. So overall, great trade. Definitely not a bad way to be, and that is that. So if I zoom back out, make the charts a little ugly, you'll notice, thank you election, a lot of the USD pairs have just been booming. There's no entry here according to the strategy. Definitely none here, here, here. And I could go on and do this for an hour. Well, 20 minutes more accurately, but I'm not going to. There's just not a lot of really great setups. They've all either made a very large move and need time to digest. Even this, if I wanted to buy, I would wait until we had a pretty sizable pullback. So that's, a 50, 60 pip pullback before I would consider buying it. And I really want to see strong candle action before I try to buy this up. So we broke a level, we came down. I really need to see, this is a big question mark for me. So it's not a right now buy, even if I wanted it. And that's kind of the way I feel about most of the pairs setting up right now. So with that in mind, JPY has not been nearing very well. I do like Chef. But my pick of the day is going to be, I like JBP Chef and I like GBP JPY. So you guys have the drill. I'm going to zoom in, make it a little bit clearer candle actions. We're going to put our vertical line on the candle prior to the one that we're on. And really, in this case, I'm going to make this a red perforated line. Let's try this for the sell. And when I'm not screen, I'm going to set an alert for this. I'm not going to do a pending because with session crossovers and just seeing some really big stuff on the Forex markets lately in terms of slippage, I am going to set an alert. So when price comes down into this range, I'm going to be looking to sell. Of course, if you want the earlier entry that's not yet confirmed, that's another 15, 16 pips on the table for you. So that's definitely worth your time. Earlier, it's not always a bad way to be. It's just less confirmed, but also potentially more profitable with less risk, which is kind of cool. So first things first, I'm looking to come down into this area prior to this zone and see how we react. If we're breaking below and retesting, I'm looking to sell it down even further. I'm looking and targeting this next area. A little bit thinner of a zone, if you will, but we'll see. Easy peasy into here. ATR on this is 63 pips. So figure that's 2.5 ATR, give or take, right? You're protecting this trade regardless within 25 to 50 pips. No matter what, you're protecting within 25 to 50 pips. And that is all I have for you in terms of trades. But before we go any further, let's go and pull up what we're looking at on Bitcoin and, of course, some of the low-cost index funds. Unless you've been living under a rock, of course, you've seen Bitcoin to the moon, Bitcoin crazy, Bitcoin, 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 Bitcoin everywhere, right? Everyone under the sun is calling for its forever bullish run, giving numbers as high as 200,000, 150,000, 400,000, and the like. Yes, it's possible. Yes, we've arrived. Yes, we're buying. 100% we're buying. But I wouldn't be me if we didn't just real quick go over, let's look at where Bitcoin actually is. Let's look at what has actually happened in the last 4 years, and let's talk about some alternatives in terms of election cycles. Let's talk about how to make sure that whatever we're making, we can actually keep. Because I still think at the end of the day, no matter which investment tool, vehicle, or strategy we're using, be it day trading or our long-term investments and holds, the key to any of this is keeping what we make, right? A penny saved is a penny earned. Same kind of concept. And when you're talking about Bitcoin, well, really what we're talking about is $90,000 saved is $90,000 earned, okay? So we get the idea. But let's take a look real quick. This is February 2020 to kind of give us an idea. It's not going to be exact, so bear with me a little bit. You guys get it. January 2020, here we go. From this point, we were at $8,000 in that 4-year cycle, okay, which we still have one more month. This has moved quite a bit of a percent, right? This has moved just a huge, huge amount. Again, it's not going to be exact, but somewhere in and around 900%, okay? Obviously, that's subjective based off of what the price was at the time, etc. But what I want to show you is a couple of things. If we are to project the future price in the next 4 years, there's a really simple way to do this, and we can do this on more than one instrument. Remembering that the swing highs and lows that fall in between are irrelevant, provided you don't sell. So when this big dip happens, and this dip, just say for conversation purposes, is 70%, okay? That's a 70% move to the downside of a dip. That's hard to hold through, and most people's bank accounts and patience and tellers don't have what it takes to hold through that. But provided you have the ability to hold on for dear life and not let go, beginning, ending of that cycle, right? If we are to assume that we're going to get the same exact level of a move, that's going to put our price point somewhere in around 173,000. We talked about it a little bit earlier today in class, and we've got it closer to 140,000 for different reasons. I can go over those here in a second. But the idea is that possible to hit these marks in the next 4 years? Absolutely. If it were me, I would be more targeting about half of that. So that's 90%. We're looking for that 45% ratio, give or take. I'd be closer to targeting the 133,000 before we get the next big pullback. So same thing that happened here, right? We get this nice, we break above that 50% mark, 150% of the growth. We pull back almost to the certain point, and then we take off. I would be looking for the price numbers to go in and around. Of course, we're going to beat 100,000. That's the easy part, but what comes next? How do we know? What do we do? If you already have Bitcoin and you're already invested, cool. Your only job now is to decide how you're going to mitigate risk, how you're going to lock in profits, and if you're going to continue to invest in dollar cost average into this as you're going. But while we bring up dollar cost averaging, please, every channel under the sun is screaming, go buy Bitcoin, go buy all the altcoin, go buy the stuff. Might I suggest before we go buying stuff, so I'm going to go ahead and remove this one. Let's get that out of our way. Before we go buy, remember we're never, under any circumstances, going to buy at the exact top. Granted, this is a pretty big time frame. Every time we go to make a purchase, long term, for our long-term growth strategies, we're going to wait. That's the day chart, okay? Nothing happening here. So the days, that's last week in the election. Boom, we've taken off. Cool. Here we are in the 4 hour and the 1 hour. You're almost always going to get some sense of a pullback. Almost always. Not always. Can't guarantee it. But even that is a 4% difference, right? It might behoove you. It might be worth your interest, worth your while, worth your income, worth your monies, worth your time to say, hey, wait, I'm buying Bitcoin, but I'm never going to place my buy order. I'm going to be investing in this long term, but I'm never going to do it that way. Instead, I'm going to wait for a pullback. And there's a lot of ways to do that. I know Robinhood has a pretty new, cool system on the internet. What is it? Legend, I think it is. Really cool. If not, you can use your phone. Of course, TradingView is my go-to personally, but almost every platform under the sun can help you go take another look at this, so you're always buying at a better price. But that's what I really wanted to say is, yes, of course we want to look at this, but please don't be the person who jumps in. And also, last but not least, what we talked about in class this morning, 2 things actually. It's never 2 things, more like 22 things. 22 things, but 22 things that are worthwhile. Remember, even if this gets up to the 140,000, right? Let's pull this down. It's at 140,000. We're really only looking at a 50 to 60% gain. And I think that's worth mentioning because let's just say you're starting with $500. You've really only made $250 of profit, right? $250, which is not bad. That is definitely not a bad way to be in 4 years. That is not a bad way to be in 4 years. You've made, what is that, 10, 11, 12, 12.5% in a year, right? You ever take how those numbers fall? 12.5% per year is what you made, assuming you made about 50 to 60% in those 4 years. That's definitely not a bad way to be. However, all of those altcoins, okay, if you look at Cardano, if you look at Dogecoin, if you look at so many of the other altcoins that are out there that are doing very well, their potential far surpasses a 60% growth. Their potential far surpasses this kind of growth that we saw here, where you bought, kind of love this tool. Let's say you bought down there when Bitcoin was, $0, 0 and some odd dollars. Their potential looks more like this, 109,000%. So definitely go take a look at some of those altcoins on any of those wallets. I think it's worth your time. I think it's worth your while. If this is to be the cycle where we are continuing up, it might be a better place to not only put some of your money into Bitcoin, but into some of the alternatives. Which brings me to two other very, 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 very important things. We just said that if this goes up 50%, 60%, 70% in the next 4 years, what you've done effectively is pretty much be in line with any of the versions of the S&P 500, right? Whether that's Vanguard's version, Fidelity's version, Schwab, all you've done effectively is do the same thing. So this is a version of the S&P 500. Obviously, the different index funds you choose, some of them are going to have better expense ratios. They're the better ones to be in, but you need higher or lesser dollar amounts to participate, and there's spreads or no spreads, etc. But take a look. Same concept. This is done by election year, okay, to show you how this has performed in that amount of time. Mind you, this is a version of it. It's just under my teacher's watch list, so that's why it's labeled ES. Definitely pretty comparable. Not exactly the same, but pretty darn close. If you go all the way back to 2001, we had a negative 14% year. The following year, we retraced, but ended up a negative 40% year. Since 2009, we've pretty much recovered every single year. Get 123%, very skewed result because it's just really eating up that previous 4-year period. 68%, 52%, and 60%. So same thing goes. If I am building up all of these investments, if you are in the position where you're now making money, and I don't care where you're making it, if it's from Uber, your side hustle, your job, you should definitely be taking a percentage of that and investing. But now that you're making more money, let's say you're trading, let's say you're attached to like the 6-figure trading coach US 30 copywriter and you're withdrawing money. You're doing so at a pretty rapid pace, right? You're beating the QQQ rate, times 10, easy, hands down. But what are you going to do with that money? I think that's where all these cryptos and all these long-term holds come into play. They're just different streams of income. But we also don't want to only be in the crypto market. We want to be really well diversified. So a couple ways to do that is have your crypto wallets, and of course, maybe look into some of the tax-advantaged brokerage accounts that are going to help you buy and hold things like this, right? This growth is not that different than what you just saw on Bitcoin, right? Just something to consider. Same principle though. We're not going to go all in and buy the top. We're definitely not going to get scared and let our emotions get the best of us and sell the bottom. You never, never, never want to do that. And the rest is fine. The rest, you'll likely, most of the time, in most scenarios, end up net profitable. So right now, we're in a pullback. Obviously, that's a very small time frame. It's a much smaller time frame yet again. But to give you an idea, we want to wait till we pull back before we try to buy this up again. And assuming all of our data is correct, taking that mid-range, okay, if we are to get approximately the same amount of growth that we had, that's going to put us at about an $8,000 price point. Figure we fail at that by 50%, we're still making very, very pretty gains in the next 4 years. So that's what I'm doing. That's what I wanted to make sure we're talking about. If you're looking for an alternative way to buy into or be exposed to the crypto market, I would say do your own research. Definitely. I think there's a lot of people covering this very, very well, and it's definitely worth looking into. This is Microstrategy Incorporated, right? It's part of the NASDAQ. Everyone said it would never get there. I've been tracking this for quite a while since down while it was still in not the 38s, I wish. But we were just below the hundreds to kind of give you an idea. Beautiful, beautiful price action. Overall, very, very bullish on this. If you're looking for a way to diversify and somehow combine your stocks, right, and still have exposure to the crypto market, I would definitely go do your research on MSTR. I think it's worth your while. And again, we're never going to buy the top. Go to the 1 hour. There's a nice little pretty gap, but doesn't mean we're going to come down to fill it. Don't always have to fill it. But we want to wait till we get a pullback and continue to buy in and buy in. So we've got GBJPY. We've got, of course, MicroStrategy. It's worth discussing. We already know NVIDIA is where it is. We already know so many different instruments and altcoins that are just in a good position to literally change the trajectory of the next 4 years of your life. But the reality is, it doesn't matter if Costco or McDonald's or Nike or whatever it is that you're buying into, crypto included, is going up or down. If you're spending too much time buying the stuff at Costco and not the Costco shares, if you're taking all the gains you're making from trading and or your crypto wallets and not reinvesting it, not finding a way to keep more of the dollars you're making, at the end of the day, it's not going to make a huge dent. So make sure that with all these gains, I know your alt wallets are all up. If you've been following me or working with me for the past 2 or 3 years, there's not a shadow of a doubt in my mind. Your wallets are completely green. You're very, very happy. Your average buying price is substantially lower on almost every one of those altcoins if you bought pretty much any time in the past many years. So please consider what you're going to do with those profits, how you're going to lock in those gains, if you're going to scale in, if you're going to scale out, and what you're going to do with the money when you get that out. Because I know there are a lot of wallets that are up 6 and 7 figures just in the last couple of weeks from all these runs via the stocks, via the cryptos, mostly via the altcoins, right? So pretty pleased to make sure you're doing something pretty awesome with it, and definitely chime in, share it with me. I'd love to go on that journey with you and just take this walk toward financial freedom right together to help other people, to each one help one, and we're all making the world a better place. But that's all I've got for you today. Happy Tuesday. Happy trading. Take care and God bless.